it's time for us to go across to the management of Hindalco that's joining us now. Satish Pai, who's the MD, Hindalco Industries. Thank you so much for joining us today. Well, tell us, Hindalco India's operations have reported better than expected set of results, with Aluminium India upstream EBITDA per ton at 1,273 dollars per ton, which is highest in the last 10 quarters. Do you expect that sort of a resilience of India aluminium operations to continue going ahead?
Yes, I think that the India business results, I expect the sort of good trend to continue, largely because I think the demand is quite strong. And the second thing is we have very stable operations and our input costs are under control. So these two will help us. The LME is also expected to remain at that about 2,500 levels. So yes, we expect the strong Aluminium India results to continue.
All right, sir, thanks so much for that outlook. But I want to draw your attention to Novelis as well, because Novelis, meanwhile, although numbers were steady, the outlook on demand was weak. Help us understand why there is divergence when it comes to both of those. Is weak automotive demand a major concern, and which geographies are impacting global demand the most?
So I think that just to clarify, the sectors that Novelis operates in, the largest sector is can, which is packaging, and the demand for that is extremely strong. The aerospace, which is another sector, the demand for that is very strong. On the specialty side, the market with lower interest rates is coming back. The auto picture is a little bit nuanced because the US market is quite strong. It's only in Europe where we had the Sierre plant flooding, which impacted our shipments to the auto sector. And to be fair, the auto market in Europe is a little bit weak. So the only real place where we are seeing weakness in the auto market is Europe. US is quite strong.
Right, and also speaking of Novelis, what about Novelis's IPO? You postponed that, in June this year, citing weak market conditions. How soon do you see the market conditions becoming more conducive?
I think we'll have to wait and watch. As you said, we want to make sure we get a premium valuation. So we will look at the market conditions, and we will also make sure that the Bay Minette project by middle of next year would largely be de-risked because majority of the contracts, etc., would be given out. So hence any worry whether we will hit the 4.1 billion budget and the timeline will also be gone. So we think that once the Bay Minette project is de-risked and the market conditions good look, then we will be back into the market for the IPO.
So, Mr. Pai, would it be fair to say that the Novelis IPO will be completed in FY26?
I think we'll have to wait and watch.
Okay, well, you have also withdrawn short to medium-term Novelis EBITDA per ton guidance due to jump in scrap prices. What really seems to be the problem here, and how soon do you expect the trend of rise in scrap prices to reverse?
Yeah, what has happened is that China has taken away some restrictions that they had on scrap coming into the country. So what has happened is that there has been a lot of Chinese buying of scrap from many of our normal places like Mexico, US, Europe, which is why the demand for scrap suddenly jumped up and the scrap spreads tightened. Now, we think this is probably going to last a couple of quarters, which is why we said that we would not we will pause the guidance on the EBITDA per ton for Novelis. I expect this to last a few quarters.
Right. Also, now that you're confident of commissioning the Bay Minette at a cost of $4.1 billion in the second half of FY26, is the rising capex cost no longer a concern at all?
Yes, as the current date, we are quite confident that we will meet the 4.1 billion target.
Right. Also, you in your on your call yesterday, you had announced a capex of $4 to $5 billion over the next 3 years for upstream projects in India. Help us understand what really is this capex really meant for?
So let me tell you. So we already announced projects. We have an alumina refinery and a copper recycling plant. Now we are also launching an aluminium brownfield smelter expansion in our Aditya and a copper smelter expansion in Dahej. Both these projects are about $1 billion each. So we have announced another 2 smelters, copper and aluminium, at $1 billion capex each. So with that, our total guidance now comes to about $4 to $5 billion over the next 3 years.
Mr. Pai, while that sounds good, could you help us understand how all of these expansion plans of yours will be funded? Now, with your consolidated debt already at 36,000 crores, and since Novelis in India capex is also lined up, how much could debt inch higher going ahead?
So look, the two balance sheets, we keep them very separate. I think Novelis's balance sheet is going to be funding their Bay Minette project. The India balance sheet is going to be funding the 4 to 5 billion that we require in India. Now in India, we are net debt negative. We have about 12,000 crores of treasury, and we are generating a lot of cash. So I think over the next 3 years, we will probably have to borrow maybe $1 billion to $1.5 billion more, going to depend on our cash generation. But the India balance sheet net debt to EBITDA is negative right now and can easily handle the 4 to 5 billion capex that we plan over the next 3 years.
Right. Mr. Pai, so if and when the Novelis IPO goes through, how will the proceeds be used by Hindalco then?
No, I think that last time we had done it, we had said that we would dividend it out to the shareholders. I think now when we go out to the IPO next time, we will then take a look at what we do.
Okay, thanks very much for joining us on the show and on ET Now, Mr. Pai. Thank you so much for joining us. So that was Satish Pai, MD at Hindalco, giving us a sense of what the growth and the expansion plans going ahead could look like for Hindalco as well as Novelis.
If you like this video, then like, share and subscribe to ET Now.